Hi, I'm Kep Kepner CPA here in Dallas. If you invest in the stock market, you're probably familiar with the term of price-earnings ratio. Basically, that says that the price of the stock is higher than the earnings. So if you earn $1 a share and the price of your stock is $20, then you have a 20 times price-earnings ratio. So does that really hold true for a small business? Well, typically in a small business, it's a little bit different. And the reason is liquidity. You know, you can sell that share of stock for $20 a share. You can sell it today. And if it goes down to $19, you can still sell it for $19. And maybe that's not 20, but it is 19. So you have a lot of liquidity. When you have a small business, then you're in a different situation. You have to be measured differently because you can't sell off one share of your stock because there's nobody who would buy it typically. Nobody's going to buy 1% or 1/10 of a percent of your business. So what happens in your business, your measurements are different. You're often measured on return on equity. Now, public companies are measured that way too, but in your case, return on equity is really important. If I have $100,000 in equity and I'm going to make $100,000 profit, then that's 100% return on equity. Man, that's great. You seldom put $100 in the stock market and get back $200. So the reality is you're measured on the return on your equity in a small business. Then you decide, well, okay, maybe I can borrow some. So that's where the concept of leverage comes in. If you can borrow some money, pay the cost of the borrowing, and instead bring twice as much money to the bottom line, then your return on equity has doubled. That makes a great deal of sense to an investor. It makes a great deal of sense to a banker because they know that if you're making more profit, you can pay back that loan they gave you. And it should make more sense to you, the business owner, because if you're doing that, you have the possibility of either adding to your equity, keeping the money in the company so that you can grow more, or spending the money on strategies that will help grow the profits of your business. So even though you're a little company, you will be measured by statistics. The bank will measure them. Your investors will measure them. And you really should too. Think about what happens when you talk about your favorite athlete. Pick your sport. Let's say it's track and field. And somebody is running the 100-yard or 100-meter dash. The world record is around 9 seconds. What do? The first thing the coach does is they set the goal with the runner. They say, well, maybe you can do it you want the world record, you got to do it in 8:09. Man, that's a big step. That's maybe a 10 or 20% improvement over the world record as it is right now. What do they then do? They evaluate and measure every meter of that 100 meters for that runner. They look at how fast they come out of the blocks. They look at how fast they are in the first 5 yards or 5 meters. They look at where they are halfway. They look at the way that they finish. So a coach helps evaluate the performance of the business or the athlete. The coach gives strategies to get the business or the athlete in the shape they need to be in to try to meet their goals. The coach values and evaluates the business as they go along so that the business can achieve its objectives or that the runner can hit the milestone they want. That's what you do when you're measuring a company. At Kepner & Company, we have statistics where we measure ourselves. That way we know how we're performing and we know what's reasonable to set an objective for the next month or the next year. We know if we can achieve our growth through marketing, We know if we need to buy additional accounting practices. We know if we need to have additional marketing people. We need to know about our staffing. All of these comes from measuring our business. So if you need help in measuring your business because you're not meeting your goals, or simply because you're meeting them but you know you could do better, then give us a call. We can help you.